Basic market structure, part one. This is part one because it's going to be a part two, and the part two is going to be on advanced market structure, particularly multi-time frame analysis and how you can utilize that in your trading. But for today, we're going to concentrate on the basic market structure. By the time you're leaving this webinar, you would be so confident because you understand how the market works and you would have an understanding of how to interpret charts literally. So without further ado, let's get right onto it. Okay, so right here we have this. So we have the uptrend, the bullish market structure. Now, when we talk about market structure basically, are just patterns that give us, an idea, a bias as to what the market is going to do, an expectation as to how the market is going to behave. So here, if you look at this, you see here we have this simple market structure. You see, the market comes up here, makes a higher high. This HH means a higher high, and then it comes down, a higher low, and then it goes again, breaks this former higher high, pulls through and makes another new higher high, pulls back again, and then goes up, break this former higher high, break a structure. That's what we have here is BOS, break a structure, and then makes another higher high, and then pulls back again, and then breaks through again, making another higher high. Now this series of up down up down up down up down while the market is going up is called an uptrend. It's a bullish market structure, right? And you can see that here. So we have basically this has a simple theory of market structure and uptrend. When you hear uptrend or you hear bullish market structure, this is simply what people are talking about, right? So just series of higher lows and then higher lows and then higher lows, and you just see everything's just going up that way, right? So that's a bullish market structure, an uptrend. Now that said, this is a simple of course structure. Now you actually have a more complex structure in the market, in the reality of the market. So it will look something like this. You have this push up, a higher high is formed, and then it pulls back, and then it goes up, breaks this form of structure. You can see that boss there, that's BOS, break a structure, and then forms a new higher high. And then when coming back, usually it won't just be a straight line that just comes back like that. It's going to be like a zigzag motion, right, downwards. You see that, right? It just moves ups and down. It moves up and down, until it comes here, and then it moves back up again, and then pulls back a little bit, and then breaks the structure again. And you see this boss here, right? So you see it makes another new higher high, and then coming back again, it pulls back again, and have the zigzag motion and down and down, and then it comes down here, and then moves up again, and then pulls back a little bit and breaks the structure. Now this is literally how the market moves, right? So the reality of the market is you have all this up, down, up, down, up again, down, and then up again. So you see just a series of movement like this, up, down, up, down, up, down. You can see the market is trending upward. So that's a bullish market structure, an upward trend, right? Now we also have the downward trend, as you can see here on this right side. And the downward trend, by the way, is called a bearish market structure. So you can see here from this high, the market pulled down, and then it came up here, and then it went down, and then came back up. It went down again and pulled back up, and then went down again. And you can see the market was just going down. So that is called, a bearish market structure, a downward trend. That is how the market works, right? You probably have heard this before. It is said that nothing stays up or goes up forever. Whatever goes up must come down, right? So that's just the reality of how the market also works. So prices go up and then they come down, prices go up and then they come down. There's always this fluctuation up and down. Now that said, we have here this this LL that we have here, that means a lower low. So the market pulls through, you have this lower low here, and then pulls back up a lower high, and then pulls and breaks the former lower low, making a new lower low, right? And then pulls back up and then makes a new lower high, right? This high is lower than this previous one, so it's a lower high, a new lower high, and then pulls down and breaks the former lower low, forming a new lower low, and then pulls back up, and then forming a new lower high, lower than this one, so it's a lower high, and then it pulls down, breaking the former lower low to form a new lower low somewhere around here. So when you see this kind of movement in the market, it's called a downward trend and a bearish trend. Now this is a simple, of course, theory. Oh, this is very simple for you to understand this. However, the reality of the market can be different. So the reality of the market looks something like this. So you have this move down here, you have this lower high, lower low, right? And then it pulls back up, and then to come down, you have this zigzag motion. You can see that, and then it breaks the former, lower low here, making what? Forming another new lower low, and then it pulls back up in a zigzag motion again, and then it continues and continues and continues, basically, right? This one breaks another new structure here, and then it goes on and on like that. This is really how the market just moves. So the fundamental thing to understand here is that you have two major trends. Number one is the uptrend, and then number two is the downtrend. Okay, now that said, let's look at another concept called strong highs, strong and weak highs or lows. Now we have the uptrend or the bullish market structure. Now an explanation of how this works is this. Now you see here we had this low here, right? And then the market pulled up here and then pulled back a little bit and then broke this high here to form a new high here, right? Now this new high was formed by this low here. This was where the energy came in, the money came in, that pushed the market past through this previous high. Now, because a lot of money came here and pushed through, that broke this previous high, this low is now considered a strong low, right? I'm going to take that, gently again. The money came in here and pushed this move that actually broke this previous high. So because a lot of the push came from this place, right? So this is now considered a strong low because it took out this high. Simple. This low took out this high, so it's a strong low. Then the market pulled back down again and then broke another structure. So this low here took out this high again. So this low is now considered a new strong low. And then it pulled back again and then broke this high here. So this new low here now is now considered also a new strong low because it took out this high. Simple. So this low took out this high is a strong low. This low took out this high is a strong low. This low took out this high is a strong low. Right now, if you notice something here, we have this, this arc, this solid arc. This solid arc simply, stands for a strong low. And then you have this dotted arc here. That means this is a weak low. So this is a strong low because it took out this high. And this high becomes a weak high because this low took it out. And the same thing also happens here. This is a strong low because it took out this high. And this is a strong low because it took out this high. Right? That's simply how it works. And of course, the reality of the market is that the market does not just move. Now let me just say something. The market in reality does not just move in a straight line like this, right? It doesn't just move like that. The reality of the market is more like this. You have something like this, right? And then like this, and then it comes back and then down, and then it goes back up, and then like that, right? Like that. It comes like now again and then goes back up like that. This is something that is close to, there's a lot closer to the reality of the market. So it looks something like this, right? Now, that said, you look at this, the same thing also. We have, the market came up here and then pulled back down, and you have the strong low because it took out this weak high here, a break of structure, a boss. So we now have, a new higher high here, and then the market pulled back down again, all the zigzag motion, and came down here and went back up, and then bam, it broke this, previous high. This becomes a strong low because it took out this high, and then it came down again and then broke again. Now this becomes a weak high because this strong low took it out, right? And of course, this is an upward trend because you can see it's just forming series of higher lows, higher lows, goes up, pulls back, higher lows, and then it's just trending upwards, right? So this is the reality of the market. Now the same thing also applies to the downward trend. You can see here it started from here and then it came down, pulled back up, and then broke structure. This becomes a strong high because this high took out this low. So it's now a strong high. and then it pulled back up again and then broke the structure. So this becomes a strong high because this high took out this weak low, right? It becomes a strong high because it took out someone. So if you take out someone, you're stronger than that person, right? So this high took out this low, and therefore this high is a strong high. And then it pulls back, up again and then breaks structure again, taking out this, weak low. This becomes a strong high. And this is, of course, you can see the movement. This is, of course, a bearish, market structure, right? So this is the simple concept, of strong highs and weak lows. Now, in a real market, you have something like this. It comes down and then, break, it just continues making, this lower lows here, and, it just goes like that in zigzag motion, and it just continues to break the structure. And you see this is all a downward trend. Now, the simple concept to understand here is that a strong high or a low, it's a high or a low that has taken out, a previous higher high or a higher low, right? A higher high or a lower low, right? So, and also a weak, high or a low is a previous high or low, that refused to cause a higher high or a higher low. So if, this, take this out. So this is considered a weak low because it did not take out anything, right? This is also considered a weak low because, as if, for this to become a strong low, that means it needs to take out this high here. But you can see here, it came here and then pulled down. So it didn't take out anything here. So that's why it's considered a weak low. And then this is also considered a weak low too because it refused to take out this previous high. So this came up here and then pulled through and took it out. So it becomes a weak low. Now that's just the concept of, strong highs and weak, and strong highs, strong or weak highs and lows. All right, so that's it. Let's go to the next thing. Now, trend change. When we talk about trend change, a shift in structure, basically that's what it means. Now, we've already seen, the uptrend and we've seen the downtrend, right? Bullish market structure and bearish market structure. Now, the market does not continue to just not go up in perpetuity, and neither does the market go down, continue to go down in perpetuity. Now, there's something called a trend change. The trend can change. Now, how does that work? Now, look at this here. You see the market pulled up here, pulled down, pulled up, pulled down. Already you can see it's making, higher highs, right? So you already know it's an upward trending market. So it pulls up again, pulls back, pulls up again, right? It took out this high, so you already know that it's, you can see how all these highs, were taken out as the market, was pulling up and all of that. And then look at what happens here. The market now pulls down and takes out this low here. Now, because it took out this low, now we can see that there is a change of market structure, because the market was pulling up, down, up, down, up, down, taking out the higher highs, and then all of a sudden it pulls down and takes out this low that is supposed to be a strong low, and it's a strong low because it had taken out this higher high, right? But then the market pulls down and takes it out. So that becomes what that tells us, that the market has now changed character, has now shifted in structure, right? So the trend has shifted. So that's the meaning of that, right? So, higher highs, higher highs, higher highs, higher highs, and then all of a sudden, boom, it changes structure. It takes out this, supposedly strong low. That's a shift in structure. So when that happens, now we're expecting that this will now become a strong high because it took out this high, this low rather. So this becomes a strong high because it took out this low. So when this becomes a strong high, that means we're expecting that the market is not going to come back here and take out this high. That's our expectation, right? There's something called the expectational order flow. So this is, the order flow, just, making higher highs and, just going on like that and making, an uptrending market there. So we always have an expectation. When you see an uptrending market, we have an expectation that is going to continue, but also we know that that might come to an end anytime, and we really don't know when. But when we see a change of structure like this, from the upward trend, and then all of a sudden, boom, it takes out, the previous, strong low, then we know that there is now a shift in structure. And then we expect now to now see that that shift or that downward trend is going to continue in this case, right? So it comes back up here and then takes out, this previous, low, right? It takes out this previous low and then it continues. Now you can see this, it takes out the previous low, but then it comes back again and takes out this high again. Now, the reality of the market is that the market can do whatever it wants to do. The fact that the market is trending upwards does not mean it's going to continue perpetuity. And then when it begins to trend downwards too, doesn't mean it's going to continue perpetuity. But we have an expectation that the market is going to obey, the structure, right? It's going to obey, rather, is going to be, of course, the structure. So basically, you can see here it changed structure, right? It broke structure to the downwards, and then it broke structure again upwards, right? And then you can see it came back here, and then broke structure again here, right? And then it came down here, and then broke the structure, and then returned here, and then it goes down, right? The reality of market is that the market can always, change, structure, right? So that is the concept of, a trend change or a shift in structure. Now, let's get this, really ingrained. Now, when you look at this is a more complex, something that's close to reality and how, the market moves. Now, you can see here that the market came down from here, pulled back a little bit, came up here, and then pulled down, the zigzag motion, pulled here, and then went back up and then pulled back and broke that previous structure. So we're in this is now a weak high because this strong low took it out, right? Now we have a new high here and then came down zigzag motion and then returned back up and broke structure. Now this becomes what? A weak high because this strong low took it out. And then it came down here again and you have this again and then it broke structure. So this becomes a weak high and this is a strong low because it took out this high, and the market continues to move and then comes down and takes out this previous strong low, right? So we now have a change of structure, right? A shift in structure. Now it's important to just note that, right? And then it comes down here and then it goes back up and comes back up and respects this previous strong high here, right? It respects this previous strong high here because this is now a strong high because it took out this low. So it's now a strong high. So we expect that the market is going to come here and would not take this out and would respect it and then, continue its downward trend. And that happens. And you have this new break of structure here like this and then pulls back up a little bit and then continues. And, it continues like that. Basically, a shift in the market structure. The market was trending upwards, right? And then all of a sudden this caused the market to shift in structure and then we expect now the move downwards to continue. So that's a concept of a shift in structure. Now let's look at something also we call the change of character. Now, this is important to understand the concept of, the basis of market structure, because when you have this ingrained in your mind, I can tell you for a fact that all the use of, indicators and all the different things to confuse your understanding of the market, we just, completely fizzle out. And that's why it's important to have a strong foundation in market structure. As a matter of fact, I consider market structure to be king, right? Okay, so anyways, that's by the side. So here we have this change of character. Now, what do we mean by change of character? Look at this here. You have this market trending upwards like this, right? And then all of a sudden this changed, right? So this is a change of character. Now, what I had shown earlier was a shift in structure. The change of character is the same thing as a shift in structure. It's just saying that, hey, the market has changed character. The market has shifted structure. Now, if this is not your first time, of course, of coming in contact with trading concepts and all of that, you can actually hear these terminologies used by different people in different ways. But most often than not, in a lot of cases, sometimes they mean the same thing. So either shift to structure or change of character. So the market was trending up, as you can see here, making new higher highs, right? This was making new higher highs here, and then making also new lower highs, right? The lows were higher than the previous one, and then all of a sudden it changed structure, and then it goes back up here and then breaks again, and we've now changed character. So this first change here that took out this previous low is what we call the change of character. The first one is what we call the change of character. When we look at, when you begin to, look at maybe more time frames, in trading, you have a better, you'll be able to put in perspective, the change of character. But for now, just have this understanding that the change of character is that first, shift in structure that causes, us to move either from an upward trending market, to a downward trending market, or from a downward trending market to an upward trending market. So the first change of structure is called, or shift in trend is called, a change of character. Now this just continues like that, and you can see it comes back here again and it changes character. It takes out the previous high. So that's also another change of character, and then it continues the upward trend. Now this is the reality of how the market works, and also how to interpret market structure, right? So a change of character, a shift in the trend, a change in the internal structure. Basically, that's what it is. Now, more on the change of character. Now, look at this here. You can see we have from here. You can see we have this, this market structure here. The market, the candle starts here, right? It starts here rather. The market starts there and then pulls back and then breaks structure. So it took out this previous high. So this is called a break of structure, a boss, right? A boss is called a break of structure, and then pulls back up a little, down a little bit, and then moves up and then pulls down. And you can see it takes out this low here, which is now our change of character. And what this tells us, when you're trading, is that hey, this market was trending up, but this change of character is telling us maybe this up move, is been exhausted, and the market wants to now sort of, pull back a little bit before it continues its uptrend. So when we see this change of character, our expectation is now that the market is going to change, is going to pull back. It tells us the market wants to pull back from all this uptrend, right? It wants to pull back a little, and then it continues the uptrend, right? So that's our expectation. Now, when we see this change of character, that is what we expect, that pullback. Now, we expect that pullback, but we don't expect the pullback to take out this low. Why? This low is a strong low because it took out this high. So we expect the pullback to come and maybe it's come around that zone. And then when it comes there, then we expect the market to now, respect that strong low that took out the previous high and then continue its upward trend, right? That is our expectation. So you can see here the market came down here and then it pulled back up and then pulled up, a change of character again, and then pull back up, and you see it continues. So and then it takes out this previous high. We now have a boss. So we know it's an upward trending market because of this higher lows that are formed here, and this took out this high and pulled back and then took out this high again. So we know it's an upward trending market. So this is how you interpret change of character in a bullish market, right? Just telling us that hey, the pullback is about to begin, or the pullback is about to end, and then the trend is about to continue. Now you also have the same thing here. Sometimes now you can have change of characters, and sometimes it could be a false signal. So you have here this market structure here is going up, and then you have this change of character here, but you can see it pulls back a little bit, comes down. You'll be expecting that okay, this is going to continue, the downward move, but then you can see it comes back here and changes character again. And this can happen severally in the market, right? So it pulls down and changes character again, and then pulls back up and goes, and then it changes character here, and then it breaks the structure. So there are times when you're gonna have this type of behavior, where the market basically is gonna give false signals and sort of fake out, and those are things you should be aware of, right? Because they would happen in the market. But generally, we have an expectation that if the market is trending upwards, it will continue to trend upwards, and if the market is trending downwards, it will continue to trend downwards. Now let's look at structural mapping now of the market structure. How to really interpret this in terms of the candlesticks and all of that in the market on your chart. Now there are two types of mappings that are mostly used, and that I also mostly use. So you have the type 1 mapping, and you also have the type 2 mapping. Now, when we talk of the type 1 mapping, you can see a type 1 mapping says is from wick to the body. And what we mean from that is this. You have all this, wicks on the candle. So this is a candle, by the way. You have this big candle here, right? And this line here is called a wick. And this line down here is also called a wick, right? So you have the wick broke structure to the body. So from the wick to the body, that is a type 2 mapping. So when the market breaks structure from the wick to the body, we know that that is a type 1 mapping, right? And that is a conservative approach to interpret market structure. So you can see this came up here, pull back a little bit, pulled up here, came down here, and then boom, a break of structure, right? You see that. But the break of structure is from the wick of this candle to the body of this candle. So that's a type 1 mapping, right? Now you look at this type 2 mapping here. This is more aggressive. You can see the market came up here, came down here, broke, but did not, the body of the candle did not close above this previous high. It pulled back in, but you can see it left a long wick, right? It left this long wick. So if you draw your map like this and say, oh, this is a break of structure, that is a type 2 break of structure because you're drawing it from the wick of this previous high to the wick of this candle. So that's a type 2 mapping. So the market came up here, down, up, and then broke structure eventually. So those are the two different. So primarily type 1 mapping from the wick to the body, and then type 2 mapping from the wick, to another wick, right? So that's how basically you interpret, type 1 and type 2 mappings. Now, how, do I apply this in the market? For me, I apply this, simply this way. So here you have the structure, this market, this trending market, up, down, and then down, and, it continues like that. Now, for a major break of structure for me, it has to close with the body of the candle. So that means this previous high has to be taken out by the body of the candle. So it comes down and then takes it out, something like this, right? It comes down and then takes it out. This here, this candle, the body of the candle. So I use that for, the swing, right? To identify, okay, my swing break of structure, right? And then for the change of character, a change of character, maybe just, come in here, just a week, it's enough to say, hey, maybe this move up is beginning to slow down. And then I can use, the type 2 mapping in some instances to say, hey, I'm willing to see this as a change of character and expect that the market will pull back here and respect this zone. And then I can look for entries to drive it back, hopefully into this demand zone here, right? So for me, the change of character, I'm okay to use, a type 2 mapping. But for the break of structure, I would always wait to see, a break of structure by the body of the candle before I take that into consideration, right? So that's basically how, I will interpret that in the market, in the real market. All right, so here I have a chart for you. So this is a daily chart just to show, examples of the mapping. So type 1 mapping or type 2 mapping and all of that. Now, when you look at this, you can see here the market was coming up and then down and then up. It broke structure. This was a high, this candle here broke through. And if you look closely, you'll see that this was a type 2 mapping. You can see that, all right? So it's a type 2 mapping because it broke this previous high by the wick, right? So that's a type 2 mapping. Okay, so if you look again, it just comes up here and then down and then up and then down, and you can see it broke structure here, right? Or there was a shift in the trend. Now you can see it was from this wick to the body of the candle. So that's a type 1 mapping, right? So it came down here and then up and then nothing really happened here. Oh, it broke structure here a little bit from this candle here. You can see from the wick of this candle, it touched, this long wick that this candle left here. So that's the type 2 mapping, right? But nothing really happened. So, and you can see why sometimes the type 2 mappings can be false signals, because you can just say, oh, because this broke, this broke structure, or there's a shifting trend with this week. So I'll expect that it will come maybe somewhere around here and then continue downwards, and then you'll be caught on the wrong side of the market. So anyway, so that's that type 2 mapping. So this comes up and breaks through. So obviously this broke by the body. It broke this high, right? This came like this. it broke that high, by the body. So that's a type 1 mapping. And then it goes on again, type 1 mapping. You can see that by the body here, and then type 1 mapping again by the body here, and then it comes back up here and then breaks down. But you can see before it breaks down, from this week to this week, here's a type 2 mapping, right? It broke through, and that was a false signal, right? That's a liquidity graph, but well, that's not something I'm covering here. So it broke through, right? Leaving a long wick here, and then continued this downward trend and broke, this previous low here using the type 1 mapping, and then it comes back up again and breaks through again using the type 1 mapping by the body. You see that? And then it comes back up here and then breaks using the type 1 breaker structure. Now if you just assume and say, oh, because I've seen this, I'll expect that when it comes back here, it's going to respect it and go back up, you may be caught on the wrong side of the market. So anyways, this is a daily chart, so usually there are confirmations to wait for, to see before you take any positions in the market. So but this happens, and then it comes down here, breaks this previous low, by type 1 mapping again, because it was a body, as you can see here, and then it breaks, pulls back up, and then breaks the structure again, and then it continues and on and on. Now that is basically how you interpret your type 1 markings and your type 2 markings in the market. Now going further, let's look at the 4-hour chart. As you can see here, so this is a 4-hour chart. The market comes here, this is a higher high, right? And then it pulls down here, right? And then from here it pulls through, right, to this broke structure. As you can see here, it broke this previous high, so this becomes a strong high, isn't it? So that happens, right? And then you see that the market continues to just form structure, and here it broke this high again, making a new higher high at the top here, and this comes down here and breaks this previous low, showing us that there's a shift in the structure of the market, and then it goes on and on like that. And here you can see, I didn't even draw this, but you can see from here, this high to this wick, right? That's a false signal, and then it continues going down, breaking the structure again by the body, a type 1 mapping, right? It took out this low, so that's a type 1 mapping, right? And then it goes down, and then it comes back up here, down, and then goes back up here. Now you notice something here, half has eyeballs. That simply means internal breaker structure, right? And why is it internal? Simply because you can see the market was here, came down here, and then broke structure, right? So this broke structure here, pulled down here, broke structure here. Now this is usually will be considered a strong low, right? And a swing low. And then here would have this, as our swing high. So any change of character that you have here, any change of structure, is called an internal change of structure. So that's why you see here, I'm using eyeballs, and all of that in the market. So basically that's that, right? So you get the concept. You get the concept of the type 1 mapping and the type 2 mapping, and how the change of characters, change of character works the market, and also the break of structure. Now going further, let's look at this 15-minute chart. Now for this 15-minute chart, you can see the market was here, it came down here, moved back up, and then broke structure from this week to the body. You in order to understand this, so we already know this is a downward trending market. We expect that to pull back up here, and then it will continue again, and that's what happened. It broke another structure again, and then it pulled back up again, and then broke another structure. So you can see that this is already a downward trending market, right? So for every low that was taken out, that becomes a weak low because it was taken out by this move. This becomes a weak low because it was taken out by this move. This becomes a weak low because it was taken out by this move, and on and on. And of course, all these points that were driving the move to take out the previous lows are now called strong highs, right? So up, strong high, push through, strong high, push through again, right? So that's the downward trending market. And then it comes down here, and then goes back up, and then comes down here, and then goes back up. You can see this was like a change of character, because this was a downward trending market, and for the first time you have here, this high was taken out by this move here, but this is a fake out. You see that? And then it continues its downward trend, and then it comes here and it takes out the previous low, and you see that. So the reality of the market is that this can happen, and you simply just have to stay open to what the market presents to you, not to simply predict and say this must happen. No, The market can decide to go any direction it wants to go. All you need to do is to observe and of course to take position accordingly to what you see. So here we have, it takes out again this low, so our downward trend is still in play. It comes back to the top here again and then continues and takes out this previous low here. So that means it's a really downward, it's a really it's downtrend basically. So it continues down and then pulls back up a little bit, comes here, pulls back up a little bit, and then goes down, and then comes back here again, and then pulls, continues. This is more like ranging, nothing really happening here, and then pulls here. You see this week, right? If you're not careful, you map this. If you map weeks, you just say, oh, this is a change of character. Well, sometimes it may play out like that, sometimes it may not play out like that, but you can see here, it pulls back, down here and then breaks structure, right? So we have here a major change of character. And the expectation is that there will be a pullback a little bit and then it will continue to move to the upside. Now, this is how to understand, market structure, basic market structure, lower highs, higher highs, break of structure, change of character, shift in trend, and all of that. Now, I want to believe you've been able to pick a thing or two from this. This is part one of the basic market structure, and the multi-time frame analysis or the advanced market structure is going to be the part two. So I want you to look forward to it. If you're watching this at a time when already that has already been published, so most likely you get a link to connect to it. But hey, I want to tell you something about Pareto. So Pareto Capital, basically, all our goal is to be able to build community of consistent, successful, and profitable traders. And if you've benefited from this short webinar that we've had, I want to believe that you're still going to benefit a lot from the course and also from joining the community. So you have here already a free discount I'm making available that will give you 15% off, our monthly membership or whatever package you decide to go to. Just make sure you put in my stocking profit, in the discount field, and you'll be able to get 15% more of the price. And you can join Pareto Capital. You have access to the training course, you have access to our trades. The minimum trades we normally take is 1 to 5, and what that simply means is if you risk 100 naira or $100, you're going to make $500. If you risk $1,000, you're going to make $5,000 for most of our trades, right? So that's how basically we trade. So if you want to be part of the community, you want to enjoy all of this, I encourage you to get our membership and join. You have access to community, the trading floor, semantics, trading strategy, how I trade. Literally, I'm going to be sharing my trading plan, and also you get clarity on trade setups. You have access to capital service where we share market markups, analysis daily and all of that, and you can also easily pass funding challenges. We live in a time when access to capital, it's not really a problem. It's not really a problem if you really want to learn how to trade. You can get your access to capital by simply, proving that you have the skill to trade, and that's also something that would help you in the course. And also, if you join the community, I'll be able to help you, access some of this funding challenges, and also help you become financially independent, and you can also grow from zero to literally six figures in trading capital if you really commit yourself to it, right? And that's what Pareto Capital can do for you. Our goal is to make you a financially independent trader. Our Pareto membership is not just a course, but it's the course plus the trading floor, and also plus the Pareto Capital service, where we share daily markups, market recaps, and all of that. And you're going to benefit a lot from it. So the course is there, over 40 videos, the roadmap to your funding, interactive, chat exercises and walkthroughs, access to various trading resources, the trading floor, connect with the online community, 24/7 support, real-time feedback and engagement, network with other members of like mind who are also wanting to succeed as traders. You have direct access also to the Pareto Capital team. In addition to that, of course, the Pareto Capital service, you have access to backtesting sessions, how I backtest the market, my data analysis and markups, and also weekly trade recaps and chart breakdowns, in addition to live question answers. Retail traders normally look to make 1 to 2. For us at Pareto Capital, catching 1 to 9, 1 to 5, 1 to 10, and even more than that is usually something that happens. Literally, we see all these opportunities on a daily basis, and you can be part of what we do. Imagine if, instead of struggling, to trade your own personal fund, you can have access to, trading capital of $300,000, and you make 10%, in a month, and that's $30,000. How much can that change your life? That is a possibility. In the world of trading today, there's so much capital waiting for you to access, but you need to have the right skill. You need to have the right mindset. Pareto Capital can make that, possible for you to take you from zero to funded, consistent, and being profitable. You can do this if you believe you can. So, hey, what are you waiting for? Make sure you hit that button and join Pareto Capital. You'll be receiving an email, I believe, after this webinar, and I look forward to welcome you to the Pareto Capital community and seeing how much you succeed with our course and also with all the benefits that you will be getting in the Pareto Capital community. Thank you so much for listening, and I look forward to seeing you on the other side. Thank you. Okay, hello. So welcome to this walkthrough. Now, this is one entry you need to learn how to really spot in the market, and then utilize it in your trading. And I tell you, it's just going to change a lot for you. Okay. So my chart here, I have the 4 hour, the 15 minutes, and then the 1 minute. But then we're just going to use one of those charts to sort of buttress what I want to show you here. So using the 4 hour chart, so on the 4 hour chart here, you can see clearly, right, that price is sort of trending downwards since the bearish or in the bearish market. Okay, at least based on what we have here on the chart. Now, I just want to highlight, the place of patience and also expectational order flow in terms of expecting what price would do when price comes into specific POIs in the market. Now, you can see clearly from here that price first off has been trending or was trending upwards, right? You can see based on market structure here, you had highs and lows, highs and lows, highs and lows, and then that pretty much continued. And then at this point, you had this high taken out by this bullish move, and then price sort of returned and took out the low that caused that bullish run, and then that indicates that the bearish price is changing or has shifted, from a bullish trending market to now a bearish market, right? So this is the first, indication of that. And then after that, what do you expect after a break of structure? You expect that prices, after taking out this low, will pull back into the zone or probably even into the zone before continuing downwards. But then that really didn't happen in this case. So price pushed downwards, made a low here. So to pull back into and respected this bullish candle up, and then, broke down again and took out the previous low, and then price pushed up again, tried taking out this high but failed to do so, left a giant wick as you can see here, and then price pushed down and then took out this low that we have here, right? So after that, what happens next? Price then pull back up again into this sort of order flow. You can see the bearish order flow clearly here. We won't be going into details of this, but you understand what I mean. Price, after taking out this low, pushed back up a little bit into this bearish into this supply zone, and then continued downwards. Now, one thing to take note of if we zoom out is that you observe that there was a large displacement here in terms of price. This was around the 6th of January, and price left some sort of imbalance here, right? So a lot of people call it different things, but price basically just left a lot of imbalance here. That means that after price sort of pushed violently, if I will use a word, from this zone, price didn't really return to mitigate this zone, sort of didn't retest it, yeah. And then so when you see this sort of bearish momentum, that simply tells us that there's every possibility the price will return to fill in the void here, the imbalance here, right? So when we see that, obviously, we're going to be trading, in direction of the trend, maybe with some counter trend, depending on structure and all of that on lower time frames. But of course, the most obvious trade is to trade in the direction of the trend. So you're waiting, for price to retest highs and then you sell off, and then retest highs and then you sell off, sort of. Now we know that when price comes into this 4 hour, we expect also that there's going to be some sort of reaction, and that's where I really want to emphasize what I want to draw, what I want to drive at, today, right? So let's do that. So now price sort of, this was the candle 3 p.m. on Friday. So let's just take the candle. Let's just take price back there. So by 3 p.m. on Friday already, my time, that's almost London close. So depending on structure anyways, if structure shows up, of course, before 5 p.m, uses +1, I'm going to trade it, but if not, I'm done. So this is already 3 p.m, so let's see what happens. Let's go to the 15 minutes. Okay, so now the 15 minutes we have this, so 6:45 p.m, so let's just continue. This already late, so nothing happening. You can see nothing really is happening here. Price is just basically ranging, close of the week and all. So let's take it to Monday, 1 a.m., 2 a.m. Let's take it to around 7 a.m. Okay, 7:30 a.m. Now, by this time, of course, I'm already on the chart, right? And then I've, would have analyzed the chart. I would have drawn my zones, and I would have also drawn my highs and my lows and all of that. As you can see here, we had, some little structure here. Price, if I draw this, price sort of pull down, took out, pull back a little bit, made a low, returned a little bit, and then made a low here, left a high, and then made a low here, and left a giant wick here, you see, and then price just started doing what? Just the ranging within this area, right? So nothing really happening here. Hasn't taken out the low, hasn't taken out the high, it's just playing around basically. Okay, so here we are out now. So price is sort of here. This is 7:30 a.m. So of course I wouldn't even take any trade until 8 a.m. So I'll wait for London open before considering trades, right? So here we are. So this is 7:45 a.m. So the first we want to see after price mitigates a higher time frame, the 4 hour, for example, I trade off the 4 hour, the 15 minutes and 1 minute. I want to see a change of character, right? So let's look at this. So here, 7:30 a.m. Okay, so we already have the change of character. As you can see, I already have the drawn, of course. So this high has now been taken out by this candle, as you can see. So that's the first change of character, right? Some persons may choose to recognize this as the first change of character, this bullish candle here, right? After this taken out, and that's perfectly okay. So when I see this, my expectation now is that price would return into the zone and then give me, that opportunity to buy upwards. Now, if you're to trade the 15 minutes, right? Now, if you've seen this change of character already, you can just simply take out your tool, and then of course you sort of put, depending on how you place your candle, so how you place your entry, you might decide to say, okay, I'm taking maybe half of this range, the 50% level of this range, this low here, and then this low that was taken out, this high, and then this low. Take the 50% mark, and then put your entry there and put your low below this guy here, because you know that you've seen the change of character and you've mitigated the 4 hour POI, you've mitigated the internal refined 15 minutes POI. Now you expect price to sort of react to that and then give you an entry. So if you're trading 15 minutes, this is sufficient to say, I'm going to just take this, and then what are you going to target, right? Now you see we'll be making series of high lows, high lows. So all of this area here, liquidity just lies around there. So if you're going to take the swing, this was the low that caused price pullback before pulling down and then giving us this low here. So you're going to take the swing, you can simply just enter here and put your entry here. So that will be a good 1 to 6, right? But of course you must have patience. Now this is of course also risky, because price can decide to just completely blow through your stop loss and come pull, sort of mitigate the 4 hour POI deeper before even change of character. So just waiting for a chalk alone, it's risky. It's a risk entry, right? But of course if you have proper money management and risk management, that shouldn't be an issue at all. And if you've tested it anyways and it works for you, why not? So you have a good 1 to 6 here. But for us, we're interested in entering in the 1 minute, so we wouldn't just enter here. We can actually do that, but let's just leave that and see. So with this, after the chalk already, with this candle that pull back, you can see that we're already in a trade, right? You can see that right by 8:30. So let's just leave that. Let's assume that this is an entry that we had on the 15 minutes. Okay, so let's just have that there now. But we're really interested in trading the 1 minute, so we want price to sort of retest our POI, and then after price has done that, then we can now look for further entries. Now for some people, this change of character may not be sufficient. Some persons may want to see this high taken out first before they even consider entry, and that's perfectly okay. Now depending on how you've tested the market and that it works for you, you can actually just sort of do your thing. Okay, so now what do we do? So we'll wait for the market to give us an entry. So let's see what happens. So let's play 15 minutes. Cool. So it's taking off, it has of course change of character, just taking off from here, and then let's see what happens. 9 a.m. Now just before I continue, now this is a 15-minute entry, but let's assume we wanted to refine this. Okay, now you'll notice something here, that we have something interesting here I want to highlight. Now you can see here that this candle, let me just take this guy off. Now this candle here actually swept the low of this candle. You see that, right? This candle left a wick that swept the low of this previous bullish candle. Now that is a sweep of liquidity. Now after price sort of broke through this high, right? This new high that was created by this, move here. Now we expect that price will pull back a little bit into the zone that swept liquidity. That's this zone here that swept the low of this candle, that swept liquidity before continuing. And we can actually use that to enter, the market, right? To enter a trade. So if we do that, I will go to the 1 minute. Let's go to 1 minute. Okay, so here on the 1 minute, I already have some of these things mapped out. So on the 1 minute, something interesting to pay attention here is after price, this was the change of capital in the 15 minutes. Price broke through, returned to test the 15 minutes POI, and now what happens? We now have, if you look at this, we have structure on the 1 minute. This was the high. Price pulled into the 15 minutes POI, rejected it, came here, rejected the supply zone was in control, pushed price down a little bit, and then price broke through, right? So this is basically the structure. Now with this, we know that price has shown indication that it wants to continue upward. So we can actually decide also to enter the 1 minute here. You can draw your fib tool from the low of this candle rejection from this zone to the high of the rejection. So you can either decide to enter the 50 minute at the 50% mark, right? Or at the the distal, depending on what you call it, or even at this point here where price sort of took out this high. So you can decide to actually enter there. So but for just the purposes of this, so let's just put our entry here. Now you can decide to put your low here, right? Your stop loss here. But mind you, price can actually just come and wick through your stop loss, right? So you can decide to just use this as your entry confirmation to now maybe place your stop loss maybe around here, around this previous low here, this previous guy. Now these are all just risk management, or entry methodologies you could use to sort of enter the market. You can enter on the 15 minutes, that's about 10 pips. You can enter, using 8 pips after you see the confirmation of 1 minute, and using the, the very large stop loss to sort of protect yourself. You can do that if you want to and all, and you'll be fine, right? So these are all potential entries that you can have. So with this, let's target again 1 to 5, right? This would be 1 to 5 around here. Okay, cool. So you can see the difference. So on the 15 minutes, we had this 10 pips, and then 1 to 5. Did I increase that? 1 to 5 will be around here. Almost the same. Interesting, right? Okay, so 1 to 5, 1 to 5. Okay, so already, of course, in this particular 15 minutes trade, and then you'll have another entry here. So hopefully we don't get stopped out, right? So yeah, so let's see how price continues to play out. This is what time? 9:45. So let me just play this candle fast. Oops, I'm gonna take us out. Okay, lucky us. Okay, let's drag this across. Okay, let's see. All right, price is moving out. Cool. This is now London session. Of course, it's we're off London session already. I'm heading towards New York session. So it's gonna be a long trade. So 12:45. Now let's go to the 15 minutes. Let's just go to 15-minute track right there. So 12. Okay, so we've entered 2 trades, right? 2 positions. Now depending on the risk you use, of course you may not necessarily enter 2 positions at a time, but let's see what we have. So this is a 15 minutes entry that we had around here. So let's have that there. Okay, so let's see. Now something interesting also has happened here. So if you look at this now, you can see here that we have, look at this, we have some structure here. So price sort of broke through this high, retested this 15 minutes POI, okay, and then within this zone here, if I should expand this, you see here that this low, this candle low was taken out by this candle, right? This candle took out the low of this candle, and that's a sweep of liquidity before price sort of broke through that high. Okay, so with this now, this is giving us another zone, another POI that we can actually expect price to come into before continuing upwards. Okay, we've seen a sweep of liquidity. It increases the confluence that we need to sort of expect that POI is going to hold. So we expect that price will come back in here, and then we'll look for another opportunity, and let's see what happens. Okay, so let's see this. Oops, okay, this is 215, and price has mitigated this 15 minutes POI. So what are we interested in now? We know now, let's look at the big picture. We know that price has been selling off. Okay, we know that price has mitigated the 4-hour POI. We know the price has mitigated the 15 minutes refined POI, and we've seen a chalk, rather a bullish chalk, and even a bullish break of structure, as you can see here. Now we know that there's a lot of liquidity lying around all these areas because the market has been selling off all this while. So our expectation is that the market now, when it reverses, would at least clear all of this liquidity, and there's nothing stopping it. So, and that's why we're our expectation is that the market would be bullish based on all of these confluences that we're seeing. So let's do this. So now prices come into the zone. You know what, why this POI of course is strong. I've explained that, right? Sweep of liquidity, so we trust this POI in a way. So let's go to 1 minute and see if we get an entry. Yeah, so on the 1 minute, okay, oops, yeah, so I already have this drawn up, right? But I'm going to explain how and the why, of course, explain the why of the trade. So here we've retested this 15-minute zone. Okay, this was the point where price actually first retested it. Let me just take that back there. Now when price retested this, we now expect that what's going to happen, that price will give us structure on the 1 minute, and then we'll continue to trade the bullish trend, right? The bullish reversal. So let's see what happens to 12 p.m. Okay, nothing. So price made a high and then took out this low, as you can see. So this is our new high here. So let's see what the price does again. Okay, price comes into this zone, rejects it, try to take out the high, but failed to do so. So we're waiting for price to actually take out that high to show some confirmation that this zone is actually going to hold. Cool. And now we have what we need. Now you can see here from this candle, this last high, that price sort of sold off into the zone again and then tried to break through, but then failed to do so and then pull back a little bit, and then now we have that break of the high, right? A change of character by the week, and I'm willing of course to take trades on the 1 minute if I just say week, a change of character by the week, and that's sufficient, right? So now, but this broke, took out that high, but also left a giant wick for us down here. We did not take out this low, which is perfectly good. So now even if it did anyways, it's still perfect, because that would be a good sweep of liquidity, adding to our confluence that area, or that demand zone is actually going to start. So with this, now we pull our fib tool. As you can see, I already have that here. Let me take this guy out. I already have that there. So you have the fib tool. Okay, so we take it from the high of the rejection to the low of this rejection. So we'll have that there like that. Now we have two options to enter. You can decide, you have multiple options. Let me just say two options. Now you can decide to enter here 15 at the 50 mark of the fib tool, right, at the 50% mark. But mind you, price can just decide to pull back a little bit, and then off it goes without tapping it in, and that would be sad because you've spent all this time waiting for price and then you're not taking it. So for me, I'll actually put it here at the distal. Okay, and the reason for this is simply I don't want to live with price waiting all this time doing all of this analysis, and then the time for entry comes and then I just waste it because I want to get a high risk to reward. So I know that I will still get what I want. So let's say 1 to 5, which is almost standard for me. So 1 to 5, right? So let's see what happens. Okay, so after this candle, let's see if we get an entry. Okay, cool, we have an entry, and then that's it, we're in. Perfect. Okay, price is pushing out, and there we go. Okay, almost, and there we go, and that is it. 1 to 5. Now mind you, we're still in a trade, yeah, from London session. As you can see here, we still have this trade from London session. 1 to 5, 1 to 5. Already in the New York session, we've got to 1 to 5 because our our risk, or rather our stop loss was much smaller, 4.7 compared to 10, and then 8. Yeah, right. So we're still in this trade. Hopefully this also plays out. Okay, so with this now, we can extend this guy here and then see at one point this trade actually plays out. Okay, almost there. Price is reversing. Okay, and that's it. Yep, and that's it. Yeah, so at this point all our trades our TPs have been hit. So 5, 5, and 5. So depending on what you're risking, you know what the outcome would be. And this is literally how you can trade this strategy, right? It's quite simple. It's simple, right, in theory, but it does take a lot of practice to really nail this in the board and then understand how this works, and then a ton of patience to actually wait for this setup, right? To wait for this setup and then actually carry out the analysis, and not wishing. You're not wishing for price to do what you wanted to do. You're simply following the market. You're simply following price action. Okay, so well, I want to believe you've actually taken a ton of lessons from this. If you haven't subscribed, please hit the subscribe button. The subscribe button, your subscription or your like, your comments, helps to sort of boost the YouTube algorithm, and also to allow other people to really watch this video and also benefit from this video. So please, if you haven't done that, please hit the subscribe button. So I want to believe you've taken a ton of lessons from this, and also we have a lot of free resources for you in the description section. You can just check there, and also the course, of course, for Power to Capital will be launching soon. If at the time of watching this video, that's if the course hasn't launched already, and you can join the community, and then you can really benefit from a ton of knowledge and a ton of experience that we bring daily to the market. So thank you so much for your time, and thank you so much for watching the video. I wish you all the best, and I look forward to connecting with you some other time. Cheers. Bye. Okay, hello. So welcome to this trade recap video that I want to do. As you can see on the screen, I already have I have quite the trade on the screen, and usually people say, oh, did you check the trade, or this was just hindsight analysis. So you also have proof here that okay, the trade was taken. So I'm going to be walking you through the whole logic, why the trade, why did I take the trade, why did I go long, and what was the reason behind it, right? So to do that, I'm just going to take out all of this price, all of this, whatever we have here on the screen. So just a sec, I'm going to leave that in place. Okay, so let's take this out. All right, so I've taken almost everything, right? Yeah, taking almost everything. Okay, so I've taken all of that out. So let's take this to the trade setup. Actually started for Friday. So today I'm doing this review on Tuesday morning. So let me just take that back there. So here we are Monday, and then Friday at around, let's say 5:30 or 6:15 a.m. Cool. So let's take that there. Okay, so this was where we're at, on the Friday, and then this was basically the price action, so this was what we had. Now I also have this actually on the trading floor. I did share this, so let me just pull that up. So I shared the analysis on the trading floor. I shared this with the the exclusive channel. So I have this here. Sorry for the switch between the dark themed and the light themed interface. Okay, so this, I think Friday was 20th. So here we were. So you can see here, basically this was the structure here on Friday. I shared this, and also on the 15 minutes I shared this. The market structure is clearly bullish on the 15 minutes. Ideally I would want to see a bullish continuation chalk before going long. Okay, so this was the commentary from Friday. Now you put that side by side with what we have here, so you can see it was literally the same structure, right? So let's just draw out what we have here. So here we already had, this was like I'm just going to use, so that was like a boss to the upside, and then price after taking this high returned, and then respected the low, the previous low that was registered by the candle, and then pull back up, and then we're coming into the new day of Friday, and price was around this area. So with that in mind, I'm going to take this, I'm just going to draw this across. All right, it's a large candle, but I'm just going to draw this part of the candle. Now also another thing is, you can see here that price, this candle swept all of these lows before pushing higher, so that gives us a liquidity zone, right? So now price was coming here, so it's a simple, well, I would say simple right now, right? So depending on your level of your knowledge or your confidence in the market, on also executing trades, this would differ, but yeah. Now clearly we can see that our next target, because the market is bullish, our next target is going to be this area. Okay, and someone's going to say, oh, okay, how did you just do that? How did you just assume that this is going to be the next area? There's actually a reasoning behind that. Let's go to the 4-hour and let's look at what we have on the 4-hour. So on the 4-hour here, you can see here clearly that we have, this was the low that was that got taken out, and then we had a new low, and then this low now led to this high being taken out, right? So now clearly we can see that the 4-hour has changed from bearish to bullish, right? It was bearish here, but now the low has taken out the previous high, and now it's bullish. And then after that, what has now happened? The 4-hour has returned, has pulled back. Okay, here we have this zone has been mitigated. believe drawing all of these things you know how to do already. So let me not do all too long there. Okay, so with that, we know that the next high to be taken out after prices change from bearish to bullish, the next high to be taken out is this area here. So whatever we're doing, we're not looking for shorts because we know on the higher time frame that the market is now bullish, and all we're interested in is catching longs that will take us to this area, right? So that's all we're interested in, so no shorts. So with this in mind, our bias is rightly placed. So we're not looking for shorts. We cannot be caught on the wrong side of the market. We're only interested in longs, and then that's what we're looking for. Okay, so that is that. So the 4-hour has settled that. So let's go now to the 50 minutes. So with that mindset on the 50 minutes, we cannot see this and then we're saying, oh, I want to short from here. I want to short from here to where? It doesn't make sense because it's not in consonance with the higher time frame. The high time frame tells us that the market is buying, right? It's a bullish structure. So we're only interested in looking for longs. So what I had said, on this day, you can see here the structure here. What I said was I was waiting for a bullish confirmation, right? A bullish, chalk, and then that would allow me to now position myself to take, the long. So even though I knew that this was the target, I did not just say, okay, it's already London open, I'll just place an entry here and then just do that. Even though I could do that, because if I put my stop loss below this area, I could just do that, right? But I may not necessarily get the kind of entry I'm looking for. So I wanted to see a bullish stroke, and then that would tell me the market's really, is ready to go, and then I can position my entry. So let's see how all of that played out. So 6:15, 7 a.m. So you can see, so 7:15 a.m. you can see the market pulled deeper into this zone, and now we have something here. Let's see this low here, so I can draw this. You can see that's a sweep. This low got swept, and then what I had said was I was looking for a bullish chalk, and then if maybe this high gets taken out, then I'll place my entry and target this high here. So that was it. So let's see. So here we go. Okay, so this was my confirmation now. The price was now ready to go. So with this, I now placed an entry here, and my stop loss was below the sweep zone. So you could see if I just placed here, that would have been okay, because I could have actually placed something like this, and that would be like 11 pips, but that could have also been much anyways. But so with this, I now placed my stop loss below here, and I was able to extract 1 to 8. Okay, so you can see the entry was around 5693. You can see the street here, 5693. So let's see, what do we have here? 5693. 5693 was around here. Yes, so this was it. And then my stop loss, okay, I don't have that on the chart, but I think my stop loss, anyways, I targeted the 1 to 8. So let's see, 1 to 8.5. So my stop loss was likely, let's see what it was, I think maybe 5.5 or something, because it's 8.5. Yeah, I think, let's see, yes, so it was 5.5 pips, around 5.5 pips, just below this area. That was what my stop loss was. So with this, I now knew that the market was now ready to push higher. Now, there are a few things I need to point out here. A few things could have happened, right? The market could have just moved without me getting an entry, and that would have been painful, right? And then that would have probably made me, think, oh, I could have just, entered here, and then just because I already knew where the market was headed to in terms of structure and all of that, I had a sweep zone, I had a lot of confirmation for me to take longs, but I was just wanting to look for another additional confirmation, okay, before I considered longs, and that worked out. So let's see how that worked out. So during the London session, we did not get an entry. I did not get an entry, but my pending buy limit was still, in place. It was around 1:30 during New York session. The market returned, gave us an entry. I remember that clearly, of course. And that was it. So this was it. So you can see this is where, we now got an entry around 1:15 p.m. UTC plus 1 time. And that was when we got an entry from Friday. So now, because I knew this was my target, so that was it. I wasn't bothered about looking for additional entries, just allow the trade to play. So, well, it took a while because it did all through Friday until Monday. So you could see price was just played around. The market closed on Friday, and then Sunday the market opened, and what happened next? Price, returned almost to the point of entry. Now let me explain something here, because this is where a lot of times, new traders also miss it. If you don't have confidence or clarity on where price is headed to, you're going to become fidgety, you're going to become jittery, and you wouldn't have the patience to be able to wait for your setups to play out. the market doesn't usually move in a linear, you're not just gonna have something like that. Oh, the market comes, taps you in, and then boom, it goes. The market does that sometimes, but it's not all the time. So if you don't have confidence in your setup, you can see this type of price action here. This is if you're someone who is stuck on the chart, and then you're not really going about living your life doing other things. You can't just get lost, or just get triggered, or just get uncomfortable, or just affect your psychology by looking at price like this, because you see the money is going in your direction, it comes back, it goes, comes back, goes, comes back, and then again a new week, you've left a trade since Friday, and then you've come into a new week and the market is coming back. This, what are you gonna do? A lot of people are gonna get fidgety and they're gonna sell off, or you're gonna take off your positions, and just all sorts of things, or maybe even move your stop loss to around this area, and then you get stopped out. You have to be confident on your trade setup for you to really make it. Anyways, enough of that. That's part of psychology. Okay, so here we go. So this was now Monday, 5 a.m. So now I did not take this morning trade, because I always want to see that whatever position I have in the market, I want to see it play out first before I consider adding or stacking positions. But there was also a setup here, and I'm going to show you that. So of course saw this, but of course did not take it. So you could see here another sweep of the low. Do you see this? Just the market repeating itself again and again. What do you see here? Can you see the similarity between this guy here and this? Can you see this? Perfect similarity. Okay, and this is another thing about time and price. When time meets price, that's always the best time to enter the market. So this was London Open. You can see this was London Open on Friday, and we had that momentum that came into the market, time and price, and then that gave us the pattern we needed to go long. And now we're coming to Monday and we're getting the same thing again, time and price. Okay, well, that's another thing, but that's bonus for you. Okay, so now what are we expecting? So with this sweep of this low, I'm expecting this high to now get taken, and then we can now go long. Okay, so let's see how this works out. Okay, there we go, and that was it. So you can see that now this candle here essentially took out this high, right? After the sweep of this low, the high got taken out. So with this was a nice area to enter, but I did not take this trade like I mentioned, because I had an open trade and I also wanted to just stack my positions when the first one is here to play out. So this was a good one, and also the same target like this. So that's a good 1 to 5 thereabout, right? Depending on what you want to extract from the market, but that's a good one. So this was the trade, the second trade. Watched it but did not do anything. And that was it. So you could see laid out nice. Now this was something that you see this came close to hitting that TP, but then started reversing. But because we know where price is likely headed to on the 4-hour, let me just go back there. This is super important, because when you have clarity on what you're looking forward to, you don't get fidgety about nothing. You can see the price is even yet to get to our target, our 4-hour target here. So there's no reason to be afraid, right? If your analysis is correct, if you know what you're doing, then you just have confidence in your analysis and allow the market to play out. Okay, so with all of this price action, on the lower time frame, it meant nothing, because we know that on the higher time frame, we've not even gotten close to where we're supposed to get to. And by the way, let me just make that visible here. So let's make this 4-hour target here visible on the 15 minutes, so we can also see that and also use that accordingly. Okay, so let's go back. Okay, so nice. Now look at this. So you can see this is where the 4-hour target is. Now a question you're gonna say, okay, if you knew that this was where price was headed to, why did you not target this area? And that will be a very valid question, and I'll explain shortly. And also here, why did you not target this area? I'm also going to explain shortly. Now, when it comes to trading, you need to understand your risk appetite and also your psychology. If you're not someone who is at that level where maybe you have a lot of you've made a lot of money, and then you can afford to swing, I would just advise you, hey, simply you just need to be conservative in your targets, right? Even though this is a swing target, and we've identified that on the 4-hour, that's where price is headed to. If your psychology is not yet robust, right? You may just be hurting yourself trying to catch swing, trades. Instead of doing that, why not just stick to catching, your immediate conservative, highs on the 15 minutes. So this is the immediate high. We target that. We look for another entry. We target the next 15 minutes high, and then you continue to build like that. And there will be times, of course, where the market will give you an opportunity to swing. Maybe you've already made a lot of money already from that trend, and then you just need to just follow the trend and then just swing it. It could happen, but it would come with experience, right? So I wouldn't advise anyone who is just starting out to begin to swing trades. Just be conservative in your targets, okay? And this is a good way to be conservative. Anyways, that's that. So what we know that on the 4 hour, we're expecting this high to get run over, and based on the market structure and all that I've spoken about earlier. So yeah, so let's see how this played out. So this is London session had come to a close. New York session was coming on board, and then now, and that was it. So this was basically when our trade from Friday hit, and that was it. Okay, so this trade played out during London session. I did not take this trade because I already had an open trade, but then we also had another entry which I'm going to show you now shortly. So here we go. So that was it. So our target was now hit. So 128.5 banked, and that was it. Okay, so you can see this was the trade. As I can show, I'm showing you here. So yeah, so the trade was taken. It's not just hindsight analysis and all of that. Okay, so let's analyze what we now have. Okay, let me just move that out of the way. So here you can see now London session has played out. What do we expect next? Well, we expect that New York is going to give us another entry. So look at what we have here, and I'm going to explain this. Now, another thing, by the way, I love doing, I love drawing, the pattern of the market. So this actually drew it. Let me see if I'm going to get that and show you. What's this? So basically the roundup. I'm going to show you the roundup, so you can see what I mean. So you can see this was the trade. So this was it. So you can see this was a trade that played out. You can see how it played out. You can see the pattern here. This was our our last high. So we drew that was our target. So we knew where price was headed to. Now, time and price. London opened on Friday. So we had that structure where we had that sweep, like I explained earlier, and then we had the chalk, and all of that. Whether you use this or use this, it really doesn't matter. So we have the chalk, the bullish chalk, and that confirmed the price was now ready to target this high. And then we waited during the New York session. Price returned, tagged this in, and then moved away, and then did all whatever it did, and then eventually we got our target hit. And you can see all of the analysis was right there. So 128.5 was banked from this trade. Okay, so drawing these patterns allows me to kind of view the market clearly without the noise of the candles, buy and sell candles at the end of the day. Okay, so that's that. So now going to New York session, we also now have something new here, as you can see, and I'm going to show you how this trade played out. So here, well, you can see that has already been mitigated, so I can just leave it there. Okay, then we had this POI here on the 15 minutes. I'm also going to show you that I also gave this analysis, by the way. So now with New York session coming on board, it's either price continues to push higher or we get that pullback and then another nice entry to continue the trend. So with this, we also have here this candle here. This is also a nice area, right, for price to also return to and react to, and then we get a continuation. Now the question would now be, will price react to this zone or this zone? And that will be a very valid question, and the answer to that is that I don't know. But what I do know is that I can simply just expect patterns to play out and trade those patterns. Now looking at this, you can see here that we had this continuation chalk, and then price returned, swept the lows, gave us this low, and then pulled back again, and then gave us a continuation chalk. Now novice traders will just say, okay, based on this price action, I'm just going to put my entry around here, and I stop below this area, and then I'm going to target this high. But what you don't realize is, of course, this is not even a nice target. 1 to 2, I of course go for usually more than that. So but what you don't realize is the price, using this price action, price could just use this low here as inducement for this area below this area, right? So typically what I'll usually do is I would have one entry here. Okay, I'll have one entry here like this. Okay, using this area, this candle here has inducement for this area here, so I'll have one entry here and also another one here just in case I get run over. This is what I would typically do. Okay, um, and yeah, and then target the immediate high again. Or now, if you banked opportunity, if you banked this, you can now swing. Okay, because you now know where the market is headed to. All right. So, but this is it. So this basically, you mark that has a very nice inducement for price to induce, novice traders, and then, get an entry before it continues to the upside. Okay, and also I'm going to show you, I also did give analysis about this during New York session from yesterday. So you could see, where's that? Yeah, so you can see here from the New York session, market structure is clearly bullish on the news. This is a good area to consider long. So you can see that was there, right? So yeah, so let's see. Where are we? Okay, so that was it, right? So with this now, nice opportunity to long, okay, and target the 4-hour high, because after all, there's nothing to lose right now, right? So let's see. Okay, and that was it. So 2:30 p.m. UTC +1. That was it, the entry, and then you can see, price just went ahead and did this thing and hit clear 1 to 10, and that was it. So nice trade setup, nice entry, and nice everything. At the end of the day, what you're going to learn from all of this is patience to wait for your trade setups, because without waiting for your trade setup, that's where a lot of traders miss it. You take trades that are outside your setups, and then when the right ones play out, you're simply just covering losses instead of you making money on your trades. So this was it. So I also do have here, trying to put this here, but I'm just going to play this out for you. But you can see this was a trade. Actually did record it live while it was playing, out. You can see that. So, but yeah, I'm going to put that also on the video for you to enjoy. So this is essentially the trade recap. If also, of course, you want to join the Stock in Profit mentorship, you have a 10% off. By the way, just check the chart. You can use Level Up and you get 10% off. But also, if you want to join the Discord channel, there's a free area where you can get access, but if you join the full mentorship, you get access to everything. So yeah, so this is it, and this is a recap of the trade. I hope you've actually learned a thing or two from this. So hey, it's been a pleasure sharing with you. Stay stuck in profit and see you some other time. Bye-bye. Cheers. All right, so welcome to this review. Let's go through, all of the, the trades that played out during the week. So starting from Monday of the 14th of August. So today's the 18th. So right here, you can see this candle. This is already 14th of August. So let's draw out the 4-hour structure here. So here we can see clearly we have a break of structure to the downside. Okay, and then what do we have? You can see here there's a sweep of liquidity. Price failed to close above the previous high essentially, right? So we have that, and the price seems to be pushing down. So essentially with that, we know that this is the low since price failed to take out this high. So we expect the price is going to return, take out this low. So this is where we have the money. Okay, so the money is here. So essentially with this, we know the price should come here. However, with all of the price action happening here, you can see here first off we had let me draw this. We had this pullback, failed to close, push down, then a little pullback here, and then we had this push up which failed to close, price returned after that, flipped around this area and then push down. So price right now we're expecting is going to take out the slope, but before it does that, it may pull back, before we get a continuation, right? So we're very clear with market structure, and we're very clear on what price needs to do. So let's go down to the 15 minutes. So on the 15 minutes, let's see what we have. So on the 15 minutes here, we also have clear structure. So let me just draw this. So we have here boss, and then we have this low. Okay, this is the low now that we're expecting is going to be taken out on the 15 minutes. So that's so we're clear with respect to that. Now we can see also that this high, okay, this is the high that wasn't taken out. So we have there, you can see also price failed to close above it. So that's a sweep of liquidity on the 15 minutes, right? So we have that clearly in place. Now let's zoom in to where we are at with respect to price. So here we know a few things, right? So we're super clear with respect to structure on the 4-hour, and now on the 15 minutes we're simply just trying to look for where price, the right entry point, so that we can sort of time the market. Okay, so this happens to be, let me zoom in so we can see really clearly. So we have a few areas the price can react to. We have this guy here. Okay, price can return to this area and react to that. We also have this. Okay, price can use all of this area as liquidity to tap into this area. So if you look at this, we have here, okay, this internal eyeballs, right? So I'm just going to use, do I have an eyeballs here? I do, but I'm not sure if I've updated that. Anyways, I'll just use a chalk, but that's an internal eyeballs. So we have that. Okay, and if you look at the pullback, that's about how many pips? Let's say that's about 29 pips. So it's a very it's the pullback is substantial as far as I'm concerned, and price can sort of really just push into that area. So here we have a sweep of liquidity also in the 15 minutes. So that improves the confluence, that increases the strength of this POI for me, because you can see price sort of pull back this blue candle, and then price return to sweep the highs of that candle and then continue downwards, which led to this internal eyeballs, right? So price has failed to mitigate this, so we may have that situation where price sort of taps into this area before we have that continuation. We're very clear on the direction of the market, right? We know that in terms of the trend is bearish. We've established that on the 4-hour, and we already know that this is where the money is at. So price can just sell off or price can return. So right now, based on what we have here, we have also a few continuation eye bosses. So let me just show all of that. Okay, so just show this guy here. Okay, this was around Sunday open, market open in the week. So we have this. Now all of these areas are possible reaction zones. Okay, no doubt price can react to all of these areas. Okay, but what would determine if we take a trade from these areas? Okay, we need to see certain things. So one, we'll need to see, for example, is it going to be thinking I change this to, yeah, I change the color of this guy, so that's now my 15 minutes POI color. Anyway, so now based on this, right? So we're expecting that price is going to price could tap into this area and then sell off, or price could use this area as inducement to this area and then this area before we get that sell off. Now, how do we determine where we're going to take, our sells? Okay, because all of these areas are all POIs that are actually, possible areas for price to react to. And by the way, I think I have something I need to put out here. Okay, yeah, Monday. I need to be able to catch this, but the background should be black, right? And the border should be white. Yeah. What else? Text should be white. Okay. So I think, all right, I think that works. Okay, so we're gonna use this to record everything we're gonna be doing. So let me make this 14. This is a report. Okay. Okay, so keep a record of our setup. So we're very clear on this. So for me, this is high probability POI because of the sweep of liquidity. Okay, and that was Friday of the week before. Now this pullback here is not up to 15 pips, and that is why it may not necessarily be, a strong area for price to react to. So price may actually use all of this as confluences. Okay, so what do we want to see? So let's just play the candles and take it to 8 a.m. That's what we have. 7:30, and then 7:45, and then there we go, 8 a.m. So you can see prices now. We had here this continuation bearish eyeballs, right? Okay, but then you can see prices sticking out this high and it's now returning into this area. Okay, so let's play this. Okay, 8:15, we're getting that. Okay, price has violated this guy, so we take it out. Now, by the way, like I mentioned, I wouldn't take a trade from this area simply because the pullback is not 15 pips, and they're just standard. Okay, so I wouldn't even take that trade. So let's look at this now. This pullback here also was around 13 pips, so that's something that I may not take, or that sometimes I may actually consider that because London Open, I know that price might just pull back and then we get that continuation. We're very certain we're not looking for longs, we know we're looking for shorts. That's the major trend. So the question is, where would price give us that continuation setup, right? And that's what we're looking for. So two things I'm going to do. One is I would likely enter here, okay, because London's opened this around 8:45, and then we've swept all of Asia's high, and then we can get that continuation reversal. So I would have something like this. Okay, that's my target, so I'm very clear on that. So I'm gonna have two entries. One is this and one is around this area, because, and the reason for this is simple. I know that if price fails to take out, if price fails to, so let me just expand this. So if price fails to respect this area and then pushes into this area, then I should be tagged in and then get that continuation. The target needs to be very clear first, so that is the first thing. So if the target is clear, we know what we're looking at and we know what we're looking for. So let's continue to play this and see how this played out. Okay, all right, so there we go, 12:15, and that was it. So you can see that this was the area price reacted to, and we didn't have a need of this. So this essentially was 1 to 6.9, so we can say 1 to 7 thereabout. So this was okay, you can see this around 215 already. So this was the first trade for the week. So that it's what now, how to record this again, let's say plus 7 hour, right? Yeah, so that was it. So that was the first trade, right? I think I should have this somewhere. Okay, anyways, plus 7 hour, right? So we have that. So with this, price has, arrived at our target clearly, as you can see that, and we're good. So let's go back to the 4-hour and see what we have there. So on the 4-hour too, we're very clear on where price was likely to be drawn to based on structure, and you can see price will be that, and we got our entry. So that's simply that was simply the trade for Monday, right? And then after a break of structure, what do you expect? You expect a pullback, okay? It was already in New York session, and you can see price, just extended, continue to sell off. 4 p.m. Okay, now this is around, having this chalk here, kind of, 5, and then by 5, I'm not looking for any trade. I close for the day and I go to the next day. So let's go to Tuesday. So essentially on Monday, we only had one valid setup, right, based on the stock in profit strategy. So 745. So now let's analyze this. So we know that we have on the 4-hour a break of structure. After a break of structure, what do you expect? You expect a pullback. Okay, so we have the low here. This is the low, and then we have the high, right, that led to that low being taken out around that area. So we know that we expect a pullback, and as a pullback, we're interested in trading the next day. So let's see if we get that structure on the 15 minutes. So here on the 15 minutes, clearly we have this, okay, that chalk, and then you can see here we have this has now the high. After the chalk, we registered that high. Price has pulled back. Now if price is actually going to pull, continue, if the pullback is going to continue, then we should have, we should have a setup that allows us to sort of trade into, take out this high essentially. So with this now, let's see what we have. So price after registering this low here, we can see high, low. This high has been taken out, has been taken, chalk. Okay, so we have that, and then we have here too this high, we have chalk here. So this is 7:45 a.m. So two things: one is that price could return to this area, and then we get an entry, okay, to the upside, or we may get an entry, or we may decide to be very conservative and try to protect this lows, right? So that's also something that we may want to do, but we know that this is where our target is. At the same time, we must also bear in mind that this is also a possible POI for price to return to, all right? So we have to draw all of this out. So this area, you can see price is reacting to this internal candle, okay, and we have a series of bullish. So we have bullish order flow clearly in place here, right? So this is basically we have all of this. So this is clearly bullish order flow, but we also bear in mind that after this initial change of character, price can take all of the liquidity line below this area, tap into this area before we get that continuation. So we have to be very mindful of that fact. So let's play this out. Okay, sure, take this out. Okay, price is returning, as you can see clearly. Now if we look at all of this pullback here, this is about how many pips? 14. This is about 10 pip, not much really. So simply just ignore sincerely. 8.5, there we go, 9.15. okay, price now is pushing up, okay, 9.5, and that is it. Price has already come close to our target, okay, and that is it. So essentially no trade based on this price action. So this is 11, this is what now, this is 11 or 10.45, right? So we just play this out and see. So price is pulling back. So let's just play this to New York session and see. Oh, cool. Now we'll play this to New York session. Okay. So New York session, this was, definitely news, right? So now let's look at where we're at with respect to the 4-hour major trend. We know that on Monday we had that break of structure, right? And that break of structure eventually led to, this low being taken. Now, after this low has been taken, what do we expect next? We expect a pullback, and it's the pullback that's essentially playing out. So the pullback, we expect this to pull back to the equilibrium of the 4-hour range, right? The fib tool here. So we expect this to pull back here. That may happen, that may not happen, right? But that is an expectation in terms of structure. So let's go back to the 15 minutes and let's see what we have. Excuse me. So on the 15 minutes here, you can see clearly price is pushed down, right? And that tells us, something from this we can deduce sort of that, price is slowing down in terms of, the strength, right, to push up. So we have here, bearish change of character, right? So price is pushed down, price has tried to push up, but that has failed to really happen. Okay, so we have this unmitigated area now. Because it's a counter trend entry, for me this is already a lot of move into the opposite direction, into the counter trend, and I'll be very, very careful in trying to search for entries to continue to push this to the upside. So rather, this sort of bearish push with all of this liquidity swept might just, for me, I'll just begin to look for sales, because this is basically an indication for me that, hey, price is slowing down and now price is ready to take out this low that we have here, or at least tap into this area. So let's see if that works, if we get an entry. Okay, so let's make this 9 pips, 9 pips thereabout. Okay, then let's tap just above this area, so that'll be 5, 1 to 5. So let's see if at all we get something. Oops. So that's it, we got taken out. So first loss for the week. So let me update this. Where's this guy? Okay, sorry, let's just play out the entirety of the let's get to the end of the day, right? Then we'll decide that before we register our trade. So you can see here the price now is pushing to the downside heavily. Okay, so this was already a loss, so let me just move that out of the way. So here we have, after price took out this high, now we have here a break, change of character, still to the downside. Okay, and with this now can put entry around this area, high, I'll stop right above this area. Okay, and we target this guy. This is 1, 2, 4, 9 thereabout, right? So let's see. So already 3. Okay, 3, 5. Okay, end of day for us. So let's just see what we get. All right, into the night, and then when do we get 2 a.m. Okay, so basically our target is yet to be hit, and it's already Wednesday. So now a few things. So we have an open trade, okay, and then this low hasn't yet been hit. Okay, so for Tuesday we can just put here -1 hour. Okay, and then we have a pending trade, right? So we're going to see how that plays out Wednesday. So now Wednesday's here, so let's analyze price, and let's see what we've got. So we have here this here you can see this is a sweep of liquidity. Oh, interesting. So you can see here that with this, actually, now let me also just see something here, something interesting here. Now with this type of price action, our target should actually be, shouldn't go beyond this level, and the reason is simply because we have this sweep of liquidity. So price can simply just come around this area and sort of, since this is a sweep of liquidity, so price will just respect it, and then we can get that reversal to the upside. So that's actually something to bear in mind. So but in terms of how this trade played out, this is actually the target. So 1 to 3 or 1 to 4 thereabout. So this will be plus 4 hour about. Okay, so that was essentially the outcome for Thursday trade. Okay, based on our strategy. Now this is 7:15. Here we have a sweep, a sweep zone. So price tapped into it, failed to close below it, and here we have a series of high bosses. All right, so I have a series of high bosses, and then at the same time, of course, we have here change of character to the downside. Now, something that is super important to understand is that because of all of this series of cells, we may now have, okay, this is basically just price building up that momentum for the continuation to the downside. Okay, because remember on the 4 hour is predominantly bearish, but we're having a sort of pullback as a result of after the break of structure, we expect that pullback. However, that pullback seems to be taking longer than usual, and sometimes it's an indication that price is just ready to push down, okay, instead of continuing to push in the opposite direction. So we have that in place. So we have a few POIs. So one is this guy here, okay. So that's one there. Yeah, that's even the major POI actually. So let's see what happens, right? So 7:15, 7:30, okay, 8:15. Okay, price is pushing into this area. Now if I really just want to be aggressive, I'm just going to put an entry here, put my stop loss, around this area. Or if I want to be aggressive, I'll put my stop loss around this area, right? So, and let's see, and then I'll target. Now with this, I could target the low of the 4 hour. That means this guy here, okay. Or if I want to be conservative, I'll target this low here, but I'll target that. So let's see how that played out. Okay, so you can see price just left without tapping us in, and that is it. Yeah, so by the way, sorry, that was fast, but look at this price action here. So we had this, price did not come in, did not, arrive at where we wanted to enter. We could have been more conservative by doing this, but then we'll have less RR. That would have been like 4, but wanted to get more, right? Yeah, a little more. But with this now, we could actually have traded New York session. So you can see this New York session continuation. So we have this high above this area, and then we can now target the low. Okay, so that's still 1 to 4. So this would have actually tagged this in during New York session. So this a very valid entry setup based on our strategy, and that is it. So 1 to 4. Okay, and that's Wednesday. So on Wednesday, this entry, London session did not work out, but then this entry, New York session worked out just fine with our stop above this area. So that's 1 to 4. So we can update this. So Wednesday plus 4R. Okay, now I'm just explaining the logic behind all of these trades. You can see that all of the trades have, there's a logic behind them. So it's not just blind, okay, market is going to go this direction, we take this trade. No, there's always a logic. Okay, based on so and so, this is what is likely to happen. So based on that, we now place entries and take a position. All right, so I hope this is something that's really beneficial to you. Okay, so this is no trade, this was a valid trade, 1 to 4, and that is it. So what do? We go to the next day, Thursday. So we're almost at the end of the week. Oh, that's too fast. So now here we are, Thursday. So this was 9:30. Well, let's look at what we have here. Okay, so first off, on the 4R, let's look at the 4R. Okay, so now on the 4R, we now have another range to deal with. So here we go. So we have here the boss on the 4R. Oh my, sorry. We have here the boss on the 4R. Okay, and then where's the high that led to this low being taken out? The high is this guy here. So we have that, right? And then we now have a new low. So our new low is here. Okay, cool. So with this now, we have a new range. So this, our low be around that area, and then Our range would be this guy here. So this is actually our new range on the 4 hour, right? So after a break of structure, what do we expect again? Like clockwork, literally like clockwork. After a break of structure, what do we expect? A pullback, simple as that. And then what do you want to do? Want to trade the pullback, okay? And they want to trade the pullback maybe to this area or maybe not, okay? Now it's a pullback, it's a counter trend, so you always want to be conservative with your target. You don't want to swing it like it's a pro trend entry and you say you want to get a lot from it. No, so you have to be conservative because it may pull back deeper, it may not pull back deeper, and this is a classic example. After the break of structure, you can see price did not really get anywhere to the equilibrium, and they just continued trending downwards again and gave us another break of structure. So if we're targeting the equilibrium, we have to be very conservative because price may not get there. Okay, we're clear. Now let's go to 15 minutes. So in the 15 minutes London open, another thing you have to also pay attention to is the open of the market. Okay, the sessions, when the sessions open, that's when you get that volatility that comes into the market. So here we have on the 15 minutes, let's look at the 15-minute structure, by the way. So in the 15 minutes you can see we have beautiful structure. Okay, so you can see basically lows taken, low created, sweep of liquidity, created another swept to this low here, pull back, we have another low that was now taken out, and now what do we expect? We expect a pullback and then a continuation, as simple as that. All right, so that is essentially what we expect. So how do we now trade the pullback? That is the main question. So here you can see that after 8 p.m. Asia session, eventually we had a change from bearish to bullish. Okay, so we got that. So change from bearish to bullish, and you can see the time. This is around 9:30 a.m. So this was basically 6:45 a.m. You can see that by 6:45 a.m. price pushed, created a break of structure. So what do we now expect based on this? Because we're trading the pullback, okay, we expect the price will return to this area and then continue to the upside. So what do? We'll place our entry around here, our lows below this area, our target around this high, to be very conservative, like right, the previous high essentially. So we do that, and then we target 1 to 5. Okay, so we expect now that if price, and that's a big if, right, because price may not necessarily return to this area, and that's something you just need to know. So we have to wait for price to do what it would do. So wait and see. Okay, there we go, tapped in, and that's it. Very quick one, 1 to 5. Okay, and this is Thursday London session, 11:15. Okay, now because it's counter trend, we're very conservative with our target, but of course you must always remember that sometimes price may decide to really just push and just continue to go, and you wouldn't be in regret, because at the end of the day price is counter trend, right? You're against the major trend and anything can happen, so you're not forcing anything. So by now we have all of these areas that are likely areas for price to react to. So let's draw that out. Now this candle. So these are likely areas for price to react to. And now what do we need to do? We know that when price comes into these areas, because this is a counter trend, the pro trend is to sell, right? So these are the possible areas for price to tap into and we get that sell. So what do we now do? We now put our entries around here. Okay, so for me, I'm gonna have 2 entries, and now I can swing this one because I know that if this works, it's pro trend, this low should be taken out. Okay, and then we'll have another entry for this POI. Okay, I'm just gonna put this here just in case the first POI fails, this one shouldn't fail, and then we swing it. Now we can swing this simply because it's pro trend. So let's see how all of that plays out. By the way, we've taken our our profit here, +5, and that is what? That is Thursday. So let's see how the end of the day goes. So London session. Okay, cool. Now news came out, I believe, around this area. I'm not sure, but anyways, we had this POIs drawn, so we know this were the likely POIs for price to react to, and then we get our continuation. So we have that, and let's see how that plays out. Okay, perfect. So that is essentially it. Okay, so we traded the counter trend, very conservative. we had, this area marked for the pro trend, this area or this area, and price tapped into this area and we got that sell. If this had failed, we would have taken a loss, but then we know that we'll take, hopefully price respect this area and then we get that sell. So whichever one would have been a win-win. So for Thursday we had +5 and then +7 essentially. So let's do this. So Thursday +5R +7R. Okay, and that was it, and that is it essentially. So let's go to the 4R now. Friday. Okay, Friday, which is today. I'm doing this review or roundup. Yeah, roundup review on Friday. So this is it. So now we have something. You can see this low, price failed to close below that, so that's a sweep of liquidity. Okay, so you can see that that's a sweep of liquidity now. Okay, sweep of liquidity. So let's see what happens now on the 15 minutes. Now that tells us that prices failed to close below that guy. So if that is the case, what are we expecting? Right, let me just make this a little small so our chart is not too clumsy. Okay, so since we have a sweep of liquidity there, what are we expecting? We're expecting a reversal, right? Price has failed to close below, so we expect a reversal. Okay, at least that's what I'm going to expect. So let's see what happens. Thursday, let's take it to Friday. Okay, this guy was nice. Let me take it out. Oh, I took my PD tool out. Anyways, so Asia session. Okay, 7:30 London session. Now let's look at what we have here. So here we have also a sweep of liquidity. So for me, seeing this, I would expect that after these lows were taken, we now have a change of character. Okay, and mind you, on the 4R, price refused, did not close below the previous 4R low, so it was a sweep of liquidity. Now we have a change of character, so I would be expecting that price will return to this area. Okay, this candle sweep, okay, return to this area, and then we get that sort of continuation, for me reversal. That was what I was anticipating, essentially. Okay, now I was anticipating reversal simply because, let's go to 4R again. Simply because on the 4R you can see that after this break of structure, right, price registered this low pullback, tried to take out this low but failed to do so, and we had this sweep of liquidity. So with this, I was expecting a pullback. Okay, a major pullback or a major reversal. Okay, that was risky, but that was the idea. So if price had closed below this low, I would just simply expect to catch that continuation setup, but that wasn't the case. Because this is so fresh in my mind, because this is what I did today. So essentially I had a trade here. Okay, my stop loss was below this area. Okay, and my expectation was the price was gonna return to this area, tap me in, and then we get that continuation. I think it was about like 1 to 5 thereabout. Okay, so let's see how that played out. So okay, no tap yet. Okay, let's see. All right, so it was until New York session that I had this price tapped me in. But also I remember I took a 1 minute entry around here earlier on in London session. I wanted to catch that 1 minute entry. Price moved in my direction about 4R and then reversed and took me out. Of course I took a loss because I was targeting around, as a matter of fact, let me see, I took it around here. So let's just see an example. I think about maybe, yeah, I was targeting around 1 to 8 or thereabout. But anyways, went 1 to 4 in my direction, then reversed on me, and I took a loss. So this was my second trade in the day, and then let's just see how this happened. But of course it ended up as a loss, so that was it. So 2 losses for me on this particular day. But for the review, I'm only just showing you the 15 minutes setups, because if you don't have a 15-minute setup, then you have no business looking for 1 minute entry. So at the end of the day, each potential 15-minute setup, you could also catch a 1 minute entry, but of course it depends on you, to depend on your skill set and all. So this is minus 1R. Okay, so these are all the valid 15-minute setups based on the back test we just did now. So in summary, you can see we had, can we do the analysis? So let's see wins, okay, and then losses or lessons, okay, anyway. So for wins we have, let me just make this compact. Okay, so for wins we have 7 on Monday, 7 plus 4 plus 4 plus 5 plus 7, and that was it. So that gives us what? Quick maths: 14, 18, 22, 27. 27R. Okay, and let's look at our losses. We had 1 and 2, just 2 losses, so that's minus 2R. Okay, and that's it. So if you're risking 1%, that means this week 27%, right? Which I usually risk 0.5%. So essentially that's half of that, which is 13.5%, right? And then the losses, of course, will be minus 1, minus 2%, if you're risking 1%, or minus 1%. Okay, so at the end of the day, the total will be what? Total is going to be, yeah, so either 25% or what is this? 12.5%. And that is essentially it. Okay, so this is the roundup, okay, for the entire week. And you can see for every single trade, there was a logic to the trade. There was no guesswork, there was no hoping, there was no assumption. It was simply just following a mechanical strategy. Of course, all of this is broken down in the course. The exact thing to do, the exact way to look at the market, and of course pro trend, counter trend setups, and all of that, and how to enter all of these trades. Now all of these trades were simply just over the 15 minutes without even the 1 minute. And you can see we had about 1, 2, 3, 4, 5, 6, 7 trades literally across all the days of the week. Okay, of course most likely will catch some, will not catch some. That's the reality of the market. You will not necessarily catch all of these trades. Okay, different things will happen, different factors comes into play, but of course these were the potential, these were all the valid trade setups, based on the stocking profit strategy, and also the setups that I also teach in the course. So hey, I hope this was beneficial to you. Stay stocking profit, and see you next week. Bye bye and cheers.